All right, so you want to jump into Bitcoin. We're going to do a deep dive today into this Bitcoin stuff, especially the why and the when of investing.
That was good.
And looks like you've got some great material here from Jiggs and his Financial Freedom Academy to help us out.
Yeah, Jigs really focuses on mentoring and helping people reach financial independence. So I think we'll find his approach pretty relatable.
Yeah, that sounds right up a lot of people's alley.
He starts off tackling that big question right off the bat.
Yeah.
Why buy Bitcoin at all?
It's a good place to start, right?
Yeah.
I mean, he makes a good point about decentralization, with all the news lately about banks struggling, Bitcoin being outside of that system, that whole system. That's got to be pretty appealing to a lot of people.
Yeah, especially with inflation still on everyone's minds.
Exactly, yeah.
The fact that Bitcoin has a fixed supply, only 21 million coins, it's definitely something to think about.
Yeah. It's like, what's that old saying? Scarcity drives value.
Right. The more people want something and the less there is of it, the more valuable it becomes.
Exactly. Think about like rare stamps or those limited edition sneakers that people go crazy for.
Exactly. Jiggs argues that Bitcoin taps into that same principle.
Yeah.
And it doesn't stop there. He also thinks that as more people, more businesses start using Bitcoin, that value is naturally just going to rise.
So it kind of begs the question, right? Do you see yourself using Bitcoin more in the future? Would that wider adoption make a difference in your decision to invest?
That's the real question, isn't it? But I guess let's get into the timing aspect of it all.
Yeah, let's talk about when to actually buy.
Jiggs has this 3 blueprints approach when to buy, focusing on block rewards, time cycles, and market indicators.
Okay, blueprints sound cool, but can you break that down for me?
Sure. So the first blueprint is all about what he calls block rewards. Basically, every 4 years or so, something called a halving happens. This means that the reward Bitcoin miners get for securing a network, it gets cut in half. And Jig sees this as like a key driver behind price cycles.
So I'm picturing this pie chart right now, just like Jig shows, with those 8 slices, each representing a period between these halving events.
Right. And he says certain zones within those slices are the best times for buying or selling.
Okay.
Like he puts his zone 3, that's when the hype is super high as the time to sell.
Gotcha.
But then zone 6, when everyone's freaking out, that's his signal to buy.
So it's not just as simple as buy low, sell high. It's about understanding these larger cycles, the ones tied to these block rewards, to like pinpoint those highs and lows even better.
Exactly.
He even suggests using 25-week increments on a price chart to actually map those zones out, so you can really go look for these patterns yourself.
That's right. Jiggs is all about giving you practical tools you can use.
I like that. So blueprint number 2, what's that all about?
Blueprint number 2 is all about time cycles.
Time cycles, huh? So does that mean Jiggs thinks he can predict the future of Bitcoin prices?
Well, not exactly predict, but he has noticed a recurring pattern. It seems like Bitcoin tends to hit its lowest price point about 70 to 40 weeks before a halving event. This feeds into his theory that Bitcoin moves in roughly 4-year market cycles.
Oh, okay. So he's saying, like, historically, right before one of those big price jumps, that's when everyone's super pessimistic and they're selling low.
Yep.
Interesting. Almost like contrarian investing, buying when everybody else is scared.
That's the core idea for sure. He thinks that understanding these cycles can really give you an edge. Now, Blueprint 3 gets a little bit more technical.
Oh.
It focuses on market indicators.
Okay, hit me with those indicators. What's Jiggs watching?
He mainly uses 2. One is called the Gorian channel,
Okay.
and the other is something called the custom Fibonacci moving average.
Yeah.
And he applies both of them to the weekly price chart.
Right.
To make it simple, he's looking for those moments when the price dips below both of these indicators.
Okay.
Those are his buy signals.
I'm getting the sense that these indicators are pretty complex. Maybe we need to save diving deep into those for like a whole other deep dive.
Yeah, you're probably right. The math behind them can get pretty intense, but I think the main takeaway here is that Jiggs is using these indicators to spot those fear-driven dips.
Right.
Just like with the other blueprints. He's always looking for those moments when other people are panicking. He sees those as opportunities.
He's a brave man, that Jiggs. But wait, there's more, right? You mentioned a bonus blueprint.
Oh, right. There's Jiggs' psychology cheat sheet.
Oh, okay.
It's similar to, those pie charts we talked about, but instead of block rewards, it maps out all the emotional stages of a market cycle. He took this from Wall Street, but he applied it to Bitcoin.
Hold on, are you saying Jigs thinks you can predict market moves based on how people are feeling?
Well, it's not about predicting perfectly, but it's about seeing patterns in how people tend to react to things.
I see.
The cheat sheet highlights zones of thrill, euphoria, capitulation, even depression. And guess what? Jigs buying and selling zones, they line up with these emotional states.
So he's saying buy when everyone's depressed about Bitcoin and sell when they're all euphoric.
Basically, yeah.
That's pretty interesting.
It makes you realize how much emotion really drives how markets move, doesn't it?
Yeah.
Jiggs argues that getting market psychology is just as important as understanding the technical stuff. But he also admits that keeping your own emotions in check, that's probably the hardest part of this whole thing.
Yeah, I bet. Staying disciplined, not getting swept up in the hype or the panic, that can't be easy.
And that's where the how of buying Bitcoin comes in. That's what Jiggs dives into next. And he says that's actually the most important question of all because it really affects your ability to handle risk and to stay level-headed. But we're going to get to that in the next part of our deep dive.
Okay, now I'm really curious about this how part. But so far, I think we've got a pretty good handle on Jig's why and when. He's given us a lot to think about in terms of, Bitcoin's potential and then also how to spot those key buying and selling moments. What about you? What stands out to you so far?
Well, I'm really intrigued by the way he combines that technical analysis with market psychology.
Yeah.
It's a pretty unique approach, I think. How about you?
I'm kind of struck by how he's taken these established Wall Street um, wisdom and just kind of adapted it to this whole new world of Bitcoin. It makes you think, do those classic principles still hold true in this digital age?
Definitely something to think about. And remember, this is just one perspective. It's up to you to dig deeper, do your own research, and figure out what makes sense for you.
Absolutely. We'll dive into the how in the next part of our deep dive. Okay, so we talked about why Jigs thinks you should buy Bitcoin when, but now I'm really curious about this how part. He made it sound super important.
Yeah, he did, and for good reason. He says the how is all about managing risk and keeping your emotions in check, especially with something as volatile as Bitcoin.
Right, because knowing when to buy is one thing, but actually doing it without getting caught up in all the craziness, that's going to be way harder. So how does Jigs approach that?
He's big on something called dollar cost averaging. It's a pretty classic strategy, but it makes a lot of sense for Bitcoin.
Yeah, I've heard of dollar cost averaging, but honestly, I don't totally get it. Could you break that down?
Of course. So basically, dollar cost averaging just means you invest the same amount of money, but you do it at regular intervals, no matter what the price is doing.
Oh, okay.
So instead of trying to perfectly time the market, buying all your Bitcoin at once, you're spreading out your purchases over time.
So even if Bitcoin's price is going up, you just stick to your schedule and keep buying.
Right.
But doesn't that mean you could miss out on some gains?
Yeah, that's true. It's a trade-off. But think about it this way. If the price drops, you're buying more Bitcoin at a lower price.
Ah, okay.
Over time, this can really help average out your purchase price, and it could actually give you a better return overall.
Okay, so it's about reducing risk, not trying to time the market perfectly.
Exactly.
Take some of the pressure off, right? You don't have to be some kind of genius predictor.
Exactly. And Jiggs emphasizes this a lot. Dollar cost averaging is as much about psychology as it is about the math. It helps you detach from those short-term price swings and just focus on the long term.
I see. So it's like a system to take out some of the emotion, right?
Exactly. Jiggs says emotional discipline is one of the biggest keys to success with Bitcoin, and this helps you build that discipline.
I get it. So that's dollar cost averaging. But that's just one part of the how, right? Does Jigs have any other tricks up his sleeve?
He does. He's also a big believer in diversification. Don't put all your eggs in one basket and all that.
Right, classic advice. But how does that work with Bitcoin? Isn't buying Bitcoin itself already a pretty concentrated bet?
It can be. But Jiggs suggests looking into different ways to get exposure to Bitcoin, beyond just buying the actual cryptocurrency.
Oh, okay, I like that. What else does he talk about?
Well, one thing he mentions is Bitcoin mining stocks.
Mining stocks.
Yeah, so these are stocks of companies that, their whole thing is mining Bitcoin. It's a way to be part of the Bitcoin ecosystem without directly owning any Bitcoin yourself.
So you're investing in the infrastructure behind Bitcoin instead of the Bitcoin itself.
Exactly.
That's pretty clever.
He also talks about Bitcoin ETFs, exchange-traded funds.
Oh, yeah, ETFs. I know about those. They're like those baskets of assets you can buy and sell on the stock market, right?
Right, and now there are ETFs specifically designed to track Bitcoin's price. So it makes it easier for people to get in without having to worry about all the technical stuff that comes with owning Bitcoin directly.
So with those, you're buying a share of a fund that owns Bitcoin. That sounds way more approachable for people who might find the whole cryptocurrency thing a little intimidating.
For sure. But Jiggs really stresses the importance of, like, doing your research on any Bitcoin-related investment.
Right, of course.
Whether you're buying the coin directly or investing in those mining stocks or whatever, he's all about knowledge,
You for sure. So we've got dollar cost averaging, we've got diversification. That's two big pieces of Jig's how. Anything else he throws in there before we wrap up?
Yes, actually. He has this one last piece of advice, and it might surprise you. He says to, like, really embrace the volatility that comes with Bitcoin.
Oh, wow.
See it as an opportunity, not something to be scared of.
That's an interesting take. I feel like most people try to avoid volatility at all costs.
Right. But Jiggs is saying lean into it.
Ah.
He thinks that volatility, even though it can be scary, it creates opportunities if you know what you're doing.
So it's not about, freaking out about the ups and downs. It's about having a strategy to deal with them.
Exactly. Jiggs thinks this is like a key mindset shift that you need for long-term success with Bitcoin.
He's definitely pushing back against how people usually think about investing. But it makes sense, in a way. It's like he's saying you need to be more adaptable.
Exactly. And he's not pretending it's easy. He knows Bitcoin investing is not for everyone.
Right.
It takes patience, discipline, and you have to be willing to ride out those rough patches.
But the potential rewards could be huge.
That's the bet he's making. He thinks that even with all the ups and downs, Bitcoin could completely change finance as we know it.
It's definitely a fascinating world, even if you're not ready to invest quite yet. We've covered a lot today, from why Jiggs thinks you should buy Bitcoin to when and then how. What a deep dive.
It has been. And remember, this is just one perspective. Jiggs has given us tons to think about, but ultimately, the best investment choices are the ones that make sense for you. Your goals, your risk tolerance, all that.
Totally. No one-size-fits-all approach, especially with something like Bitcoin that's constantly changing. But I think Jiggs gave us a really good place to start.
He did. Now it's up to you to do some more exploring.
So we went through Jiggs's whole perspective on, Bitcoin investing. The why, the when, the how. It's a lot, right?
Yeah, it really is. From, those block reward cycles to that whole psychology cheat sheet. It's a lot of different tools, a lot of unconventional stuff.
Yeah. But that's kind of what makes it so interesting, right? Like, you don't hear this stuff every day.
Exactly. He's really made us, like, think about Bitcoin differently, not just as, another thing to try and get rich quick on, but as something that could, like, actually change how finance works.
He's definitely not afraid to say he believes in Bitcoin.
Right.
But even if you're not totally sold on Bitcoin itself, I think there are good lessons here, about how markets work, how people think, how to handle risk. Things like that apply to any kind of investing.
Oh, absolutely. For me, the biggest thing I'm taking away is how Jiggs puts so much emphasis on, the emotional side of investing. It's easy to get caught up in all of that, the fear, the greed, and he's just reminding us to stay calm and stick to the plan.
Yeah, for sure. And that's where those specific tools he gave us come in, right? Like dollar cost averaging and diversifying.
Right.
It's not just about, making the most money. It's about having a system that helps you not freak out when things get crazy, which with Bitcoin, they always do.
Just do.
It's like he's saying, don't try to be some kind of genius who can predict everything. Just be the tortoise who wins the race because they're steady.
I like that.
Yeah.
And don't forget, Jiggs is just one person, one voice out there. What really clicked for you?
I think for me, it's how he mixes that technical analysis stuff with the psychology stuff.
Yeah.
It's not just about the charts and the numbers. It's about understanding why people do what they do. And that, I think, is really powerful.
It is. It makes you think that investing is as much about human nature as it is about anything else. What about for you? What stuck with you?
That whole thing about volatility not being a bad thing, that was big for me. I mean, it's how you respond to it that matters. And, Jiggs saying to embrace it, to use it to your advantage. That's a pretty bold idea.
It is. But it's kind of freeing, too, isn't it?
Yeah.
It's a whole different way of thinking about things. What questions do you have now after going through all of this?
I'm still thinking about that whole wider adoption thing. Like, if everybody starts using Bitcoin, is it really going to go up in value like Jiggs says? I don't know. It's interesting to think about.
It really is. And that's the thing, right? We're still so early in this whole Bitcoin world.
Yeah.
Nobody knows for sure what's going to happen, and that's exciting.
Exactly. So much potential, but also a lot of unknowns. I guess it comes down to how much risk you're comfortable with and where you think Bitcoin fits into your own, financial plans.
Yeah, well said. And remember, this is just the start. Keep learning, keep asking questions, and don't be afraid to change your mind.
Maybe someday you'll be the one sharing your Bitcoin wisdom with the world.
Yeah. Still then, happy investing.